Hello, welcome back to Commerce. Today we are going to discuss on inflation part 3, CCA method with example. We have discussed CCA method, the current cost accounting method in detail in the previous video. Here we will be discussing about its adjustments with an example. CCA adjustment include cost of sales adjustment, depreciation adjustment, monetary working capital adjustment, and gearing adjustment. Cost of sales adjustments, prominently known as COSA. Cost of goods sold shown in the profit and loss account should be in the current cost when the goods are sold. For this, we use a formula COSA is equal to C minus O minus IA multiplied by C divided by IC minus C divided by IO, where C is equal to historical cost of closing stock, IA average index number, IO index number appropriate to opening stock, and IC index number appropriate to closing stock. Depreciation adjustment. Here depreciation is calculated on the basis of replacement cost of fixed assets. Such obtained depreciation is charged to profit and loss account. Therefore, the fixed asset value will always be in replacement cost, not an historical cost. Next, other backlog depreciation. This is just a fixed assets are revalued each year. There will be a shortfall in value. Such values shortfall is known as backlog depreciation, which is debited to revaluation reserves and set off against the gain on revaluation of asset to credit of revaluation reserve. Backlog is calculated from the formula gross replacement cost minus net replacement cost minus previous accumulated depreciation plus current year. Monetary working capital adjustment, MWCA. It is a difference between the trade debtors and creditors. It is charged to the profit and loss account and it is credited to the current cost accounting reserve. It is also having the same formula of COSA, where O is equal to opening monetary working capital, closing monetary working capital is named as indicated with C. I is average index number for the period. IO is average appropriate to opening of MWCA, and IC is index number appropriate to closing MWC. So this is similar to that of cost of sales adjustment. The fourth adjustment, gearing adjustment. Gearing is a ratio of borrowed capital and shareholders' fund. It is the sum total of all the previous told adjustments. Here gearing adjustments formula is equal to B into 100 divided by B plus S, where B is equal to the average net borrowing, S is the average shareholders fund, and A for the total of current cost adjustment. So the question says, from the following information calculate gearing adjustment required under CCA method. The question is given, 4 columns are given, particulars, opening and closing, and the common column for the adjustments amount. Debentures opening and closing are the same at 2 lakh. Bank overdraft at opening 1,20,000, closing 1,60,000. Cash, both opening and closing remains 20,000. Paid up share capital 4 lakh at opening and closing it becomes 6 lakh. Reserves, opening 1,60,000, closing 2 lakh. So total of share capital at the opening gives out by adding paid up share capital and reserves. Therefore, it amounts in the opening 5,60,000, adding 4 lakh plus 1,60,000. Likewise, closing it gives 8 lakh. Now, the current cost adjustment is given 80,000, monetary working capital adjustment 60,000 and depreciation adjustment 60,000. The total of this adjustment, that is 2 lakh. That is the previous formula we said A. Now the solution part, the calculation of net borrowing. In this question, the total borrowings are adding up of debenture plus bank overdraft. That is for opening 2 lakh plus 1,20,000 and closing 2 lakh plus 1,60,000. The total borrowings amounts to 3,20,000 and 3,60,000. Less in cash 20,000, 20,000. It amounts to net borrowing 3 lakh and 3,40,000. Gearing adjustment ratio is equal to B into 100 divided B plus S. We have said before, B is equal to the average net borrowing, S average shareholders fund, A total of current cost adjustment. Now average net borrowing is equal to half into 3 lakh plus 3,40,000. That is net borrowing average are taken here. That is opening plus closing. Opening is 3 lakh and closing 3,40,000. It gives out 3,20,000. And an average of shareholders fund. We know shareholders fund is equal to paid up capital plus all the reserves. Here we have only paid up capital and reserve. Therefore, it amounts to opening 1,60,000 and closing 8 lakh. And the average amounts to 6,80,000. The gearing ratio is equal to 3,20,000 divided by 3,20,000 plus 6,80,000 into 100, 32%. And gearing adjustment is equal to 2 lakh into 32%. That is, the 2 lakh is the total of all the previous adjustments. It is the total of COSA, MWCA and the depreciation adjustment amounts to 2 lakh into 32% gives you 64,000. Welcome.